Welcome. I'm your host, Henri Arslanian, and welcome to the Future of Money podcast. My goal with this podcast is very simple. It's to go deep in some of the biggest ideas, trends, and developments that we are seeing in the field of crypto, and hopefully empower you with this information, and then let you make your own decision on what their impact can be on the future of money and finance. To do this, I invite each week one of the leading figures of the global crypto community to have a one-on-one conversation amongst crypto aficionados and discuss some of these topics. My guest today is Richard Byworth, the CEO of EQONEX, a full crypto ecosystem to enable bringing digital assets to the world. One thing you may not know about Richard is that he's by far the person that I know who has done the most time in mandatory quarantine. Believe it or not, he has done it 6 times, over 14 weeks in the past year. That is over a quarter of the time last year spent in quarantine. Richard, as I say, that is quite incredible. I had to do twice quarantine last year, and I will never be able to do another one. But I think you're the expert with that. I mean, literally 14 weeks. That's absolutely incredible. Richard, thanks for being with us today.
Thanks, great to be here, Henry. And yeah, you know, quarantine, you get used to it after a while.
Well, exactly. Well, I don't know. I think we should have a whole podcast on how to survive a quarantine, and with the monitoring bracelets that we had in Hong Kong as well. But again, we're not here to talk about quarantines, but we're talking about the future of money.
Yeah.
Richard, I mean, first of all, can you maybe, for the benefit of our listeners today, just give us a quick summary on EQONEX and what does the company do, and a bit of its history and what it does, and then we'll go on in the podcast.
Absolutely. Thanks, Henry. All right, so EQONEX is a full digital asset ecosystem. And the idea being that any investor, be they a private investor or an institutional investor, wants to touch this asset class on a certain level. So that could be crypto itself, dealing with all the complications that come with that, i.e. touching a digital asset, or having it in some sort of derivative or future or listed product, or even taking a step back even further and implementing some of the strategies that we have through our fund management vehicle. So the idea is really to span that whole spectrum of different ways for both institutions and individuals to touch the asset class.
There's a lot of questions I want to have on the institutional and some of the products you mentioned as well. But I think before that, just for the benefit of our listeners of our podcast today, it'd be good if you can share about your personal background as well, and how you ended up in crypto as well, and also what's the history behind EQONEX as well.
Absolutely. I mean, look, I was a traditional investment banker my whole career. So I was a trader in London. I then moved to Tokyo to launch a product business under convertible bonds for the Japanese investment bank Nomura. It was an interesting time because we were going through the global financial crisis, and Nomura acquired Lehman Brothers. And then with Lehman Brothers, we built a whole derivative business. So my career, I ended up at the end of it in traditional finance, running distribution for the firm across Asia-Pac product for anything non-cash related. So that we'd look at derivatives, Delta One, futures and options, these sorts of things, and convertible bonds, as I mentioned before. When 2008 happened, I was getting very concerned about the response to it. So for me, it was about, what are we doing to our money? And I actually spent a lot of time with all the various economists and strategists within Nomura, some really smart people. And no one could really tell me why we weren't just destroying our money. And so I started making a lot of investments in gold. Yeah. And actually, stupidly, in 2009, actually, some kids on my desk were talking about Bitcoin. And I kind of dismissed them out of hand. I was like, guys, just focus on selling derivatives. Stop talking about scammy internet money. And yeah, I mean, it took me another 8 years to discover what it really was, and then that really changed my world. I left finance in tail end of 2017. I joined the company which was then called Diginex. We rebranded very recently, actually, to EQONEX. And back then we were a mining company, but we sold the mining business, and we were like, look, there's a huge opportunity to give institutions what they need in this space, because there was very little of it. And many institutions, I mean, we came from that space, couldn't touch it in the way that it was being offered in the current space. So everything that we've built has been really designed to make it easier for these institutions to come and play in the asset class.
You know, Richard, it's interesting. You mentioned how you discovered Bitcoin. It's very common to a lot of guests. We talk about how the financial crisis 2008 was an awakening moment for a lot of people. And also be interesting if the COVID crisis and the QE you're seeing right now will actually have the same impact on this younger generation of people as well. But I just want to bring it back to the business, because obviously you mentioned you're tackling the institutional market. I mean, you're obviously trying to address that need. What is the niche you see yourself playing? What is it as a company? What is the niche you guys see you're going to play over the next couple of years? Is it this regulated financial institutions? Is it the family office market? Is it high net worth? Is it retail? What is the kind of niche that you want to see yourself dominating? And how you want to compete as well?
No, but it's a great question, because if you think about the way an institution wants to play, generally the way we're seeing BlackRock trade today is through the CME future, right? Or other players, they're trading through the GBTC listed product.
Yeah.
But eventually, they're going to want to come and touch the asset directly. So by having an exchange like we do, that is in the process of being regulated under the Monetary Authority of Singapore, that is providing a sort of a regulated market infrastructure, which means we don't trade on that platform. We don't market make against our clients. We're a regulator of those markets. So we make sure that investors are being protected in that marketplace, but also that we're not listing complete garbage on the exchange as well. I hear many stories about people going onto exchanges and trying to buy Ethereum, accidentally buying Ethereum Classic, and having no idea that the protocol got hacked 3 times last year with a 51% attack. It's like, that's not protecting your investors, right? So from our perspective, everything that we do, we want to be doing for the long term. We want to make sure that we're thinking about the way that we will cause reputational risk for some of these institutions, because that's exactly what they care about. You go and ask BlackRock what they care about investing, the only thing they care about at the end of the day is reputational risk. Because if they do something stupid, or they interact with a platform, that is getting banned in various different countries across the world, then they could run the risk of losing trillions of dollars of assets.
But what is the reason you believe that? Obviously, what do you think is the reason that a lot of these unregulated exchanges, or exchanges that don't have corporate governance, or potentially don't have, are listing? There's pretty much no listing rules. Any token type of token can be listed. Are still so popular? Is it lack of education on behalf of investors? Is it carelessness from management? What do you think is the reason behind that?
Look, I think a lot of these exchanges, they've come here to make money, right? And I think that their focus is trying to make as much money as possible. So you think about, do you want to list Dogecoin? Well, Elon Musk's tweeting about it, and you look at what happened on Robinhood. Yeah. They did 1/3 of their earnings last quarter in Dogecoin. I mean, it's remarkable. So, of course, a lot of exchanges are turning around and going, okay, we're going to list it. But from our perspective, we're looking at ourselves more as a regulator. Do we want to be listing a protocol on the platform that at any point, if someone doing due diligence on us says, why did you list that? Well, we've got a third-party listing committee with lawyers involved, third-party people, of course, our product people, our blockchain strategy team. They sit on that committee and they run through all the reasons, whether or not there's a high security level to the protocol, whether or not the protocol is being developed efficiently, whether the team behind it are credible. All these sorts of things go into the consideration. We have about 12 to 15 different metrics that we judge a coin being listed on the platform on. And so for us, it's always, you mentioned governance, about being able to look back and say, this is why we did that.
And do you think the market appreciates that, though? I mean, do you think I would think the institutional type of clients you're targeting, I guess, appreciate that. But do you believe the broader crypto investor community appreciates those government and listing committee requirements and the due diligence that takes place before these tokens are made available, not only to retail investors, but also institutional investors as well?
Look, right now, I don't think people care about whether or not they've got protections around listing, because we're in the very early adopter stage of this industry. Okay. If you think of early majority or even late majority, when those guys come along, they're going to need protection, right? They don't want to be trading the latest DeFi token and getting rug pulled and losing, 100% of their money in 15 minutes. So they want to make sure they're using a platform. And by that time, we will have already established ourselves as being the standard, right? You know that you can send your grandma, your mom, even your little brother onto a platform where they're not going to be buying complete garbage. And I think that's the longer term view. And that's the way that we really envisage this industry. We're not here for a quick buck. We're here to be here for the long term and build a proper institution for the industry.
And what do you think is the future of the unregulated exchanges? Obviously, right now, if you look at them from a market share perspective, the majority of volumes activities happening on crypto to crypto and unregulated exchanges. Do you think that's a species that will disappear eventually, or what do you think is going to happen with these unregulated exchanges around the world?
Look, I think there's some quality exchanges out there. I mean, obviously, you saw the incidents that we had with South Africa. Was it last week or the week before? I forget. You had, multiple instances of people running off with assets, right? And so people do need to think very carefully about the platform that they're using. But I would say that there are exchanges that have not let people down in the past. Not just EQONEX. There are other players out there, and I think they'll continue to persist. And even if they're non-regulated, sure, the walls are closing in on the industry, and we've seen multiple examples of clearly Binance being targeted by regulators around the world. We're going to continue to see that. Obviously, we've envisaged that in the future of everything that we built. But I don't think that the early majority that like trading crypto to crypto, like trading any token they like, are going to run away from that anytime soon. It will probably wait until the doors are closed, and then we'll see.
One thing, Richard, that I found interesting with EQONEX recently was you guys just launched a token, which is very interesting. And as I was preparing for this podcast, doing a lot of research on it, it's very interesting features that you have. I mean, it'd be good if you can share with our audience, listeners today,
Sure.
What is a token and actually what does it do, from that perspective, to give them a bit of background.
Sure. So the token is designed really to bring value to anyone on the exchange, but it also looks at various cool things around the industry that we like and adds value. So for example, if you hold the token, you get staking rewards daily in the token if you're holding it in one of the DigiVault wallets, which is our custodian. So that's either on the exchange or in our segregated custodian separately. So you get staking rewards, you get utility, so things like fee reductions, various different types of enhancement of yield. You can use the asset as collateral for derivative trades. You also get airdrops. So we're actually running our first airdrop earlier in this month, so in August, and we're going to be looking at effectively saying, how do we make life even easier for some of these professional traders to be doing derivative trades. So that's a little bit of a hint at what the airdrop's going to bring. And the way that you get the token, we never sold the token, so we never did an IEO or an ICO. The only way that you can earn it is by trading on the platform or by staking it. So we have a reward block that goes every day. And that's broken into trading rewards and staking rewards.
Yeah, I mean, it was very interesting. I think it's a bit of like airline miles in a way. You're getting a compensation for actually using the platform instead of doing. And what's your view on the exchange tokens? I mean, obviously you guys did it, and obviously your token is very unique as it kind of gives benefits to people using the platform. And obviously over the last couple of years, we've seen many other exchanges launch their own tokens. Think about Binance had one, Bitfinex had one, and many others had one. First, do you think we will see more and more exchanges launch their tokens? And what do you think is the future of exchange tokens over the next couple of years?
I think the difference with those tokens, and I think they've got very good features. One, including the buyback and burn. We're implementing a buyback and burn once we finish the issuance.
Okay.
But I think that the key thing is that all of those tokens you just mentioned were sold to the public in like an initial offering. And I think there are various class action lawsuits coming out of the US around that. And I think obviously that's one of the key reasons that we were very focused on not selling it. And making sure that it was very much like a mileage program for users of the platform. I do think they're amazing tools. Effectively, you're rewarding users for using your platform. And I think that all the exchanges that have done it extremely well. Like Binance, they did their ICO in 2017. I think it was 15 million. It's now a $60 billion token. Hopefully ours will be the same. We're 20 million market cap today. I hope that we're 60 billion in 3 years' time. But look, I think it's a very smart way of effectively bringing revenues forward to acquire customers earlier. And I think that, not just exchanges, but every business across the world should be looking at tokenizing their business in some way to allow customer acquisition. I think it's super smart.
And what you mentioned before, you want to do also a buyback mechanism, which obviously has been quite controversial. Some of the other tokens in the market as well, exchange tokens. Many saying, it could be security because it's linked to revenue, and kind of gives us a lot of features that a lot of securities will have. How are you guys thinking, for example, from a regulatory perspective, addressing some of these issues that may pop up over the next couple of months and years?
Yeah, so this is an interesting aspect around securities law, and obviously we looked at securities law around this and consulted with many legal firms. So the view is that if there's no predefined amount of revenue that's being used to buy back, then it's not a security. But if you have a fixed amount, then you can calculate future cash flows. And so as a result, it's just that sort of step further back. And so we have effectively left it open in the white paper where we say we will be we could be implementing a buyback.
So it's not basically linked to revenues of the business. It's completely separate. It's a discretion decision that you guys make. Because I think that's been one of the controversial topics for a lot of the other exchanges, where it's kind of, you cannot buy a share in Binance, but you can actually go buy the BNB and actually gives you that exposure to it. So it's interesting how you guys take it. But I think you're right. And you believe that, this kind of incentive mechanisms will need to be developed over the next couple of years. Because you're right, today if somebody wants to go trade on an exchange, a part of they may get better liquidity or potentially a bit better pricing or lower fees somewhere. There's no real incentive from a perspective to actually create that loyalty with many exchanges. So do you believe that will be developed with many other exchanges as well? It's going to be a trend in the industry?
Obviously you can refer to it any way you like. It's liquidity mining, effectively benefits, air miles, whatever it might be. But if you think you're running a profitable trading strategy, why would you not go to a platform that actually is effectively paying you in a token to be actively using that platform? So I think that's where a lot of professional traders are looking at our platform at the moment. They're like, okay, I'm getting subsidized for my trading strategy through this token. And so I think that's obviously been a great customer acquisition tool. So you mentioned investors. I just want to focus about the client base and the institutional investors entering the space as well.
I mean, obviously, from your platform perspective, you guys also been targeting a lot of the institutional investors who want to get access in a platform that is institutional by nature. What are the challenges, the practical challenges you're seeing a lot of these institutional investors have as they're trying to enter the crypto space?
It's generally around mandate. So if you take a typical hedge fund, they'll have a PPM that they've predefined to their investors, their existing investors, that they do these sorts of asset class, these sorts of trading strategies. To add crypto and to add the fact that you're dealing with a bearer asset, you've got to, first of all, change your PPM. Then you've got to change your systems, your risk systems, how you deal with that. And you've also got to find a good third-party custodian that you can trust. And obviously, that's why we built the third-party custodian the way we did. And I think that for a lot of these hedge funds, it's too hard at this point in time. So what they're doing is they're dealing with futures, as I said, or with listed product. And what we're seeing in terms of the early adopters are in sort of funkier things around perpetual futures and spot product that you have to actually onboard to a crypto exchange for. These are people with more flexible mandates. So VC firms we find are actually quite active, family offices, prop shops, HFTs. So these guys that are running more flexible style mandates. And obviously a lot of the traditional, very successful market makers from the options industry have moved into crypto or are running at least some sort of crypto strategy. So these are sort of the early adopting institutions.
But you mentioned, for example, the perpetual swaps, right? The Bitcoin perps that are obviously, I think last month alone, there was over $2 trillion of Bitcoin futures alone that was traded. And you're right, I think when you look at a lot of regulated players, yes, they can go trade on a CME, but obviously it's very limited liquidity, and also even the trading hours are very, very limited.
Yeah.
Do you believe that a lot of the traditional hedge funds will be able to trade on unregulated derivative platforms? And what do you think is the future of perpetual swaps? Do you think they will always stay in this unregulated sphere, or that we will eventually need to move them into the regulated sphere from that perspective?
No, look, I think it's a really great innovation. Obviously, it was invented by BitMEX, and I think that it was super smart way of dealing with an asset that just trades 24 hours. And I would say that, when we look at a Delta One business in an investment bank, right, the synthetic product, right? It's synthetic representation, contract for difference, whatever you want to call it, of an underlying asset. That's exactly what a perpetual swap is. It's just structured slightly differently to your normal funding and, as you say, 5 days a week, 9 to 5. So it's really just about providing a better tool for an industry that never stops. And I think this is going to get into the hands of the institutions. They're going to want to be able to trade it. The amount of institutions that are trading the perpetual futures at the moment is huge because, these trades are really interesting. There's this, obviously, the basis trade everyone's aware of, but there's also multi-venue different trading. I mean, like our platform was paying longs for the last 3 weeks where most exchanges were paying shorts. So you kind of get these reversals all the time. There's multiple arbitrage opportunities due to these funky features.
Yeah, I think you're right for the perpetuals. I mean, also I think from a trading perspective, if you consider that half of the crypto hedge funds in the market right now are quant funds, I mean, I think these derivative instruments become, de facto, you need to use them whether you like them or not. But it's going to be interesting, like you said, to see how the industry is going to evolve from that perspective. And I mean, do you believe we will see more derivative instruments? I mean, somebody like you spent pretty much your entire formative years in finance in the derivative space. We're already at the early innings of the crypto industry. When it comes to derivatives, what are the type of derivative instruments you expect to see over the coming months and years in the industry? Not only with EQONEX, but let's say in the industry more broadly as well.
Yeah, I think as you say, the perpetual product is very prevalent. Most exchanges have it. We have it on our exchange. We're going to be rolling out quarterly futures, which is much more similar to what you have in the traditional space. We're also going to be rolling out options. We have institutions crying out for it because, the venues that they have for options today are very, very limited. And when you build a derivative business and you need to have options flow, then the core component of that is a structured products business. Structured products business is what feeds all the largest derivative houses. So if you look at UBS, Credit Suisse, JP Morgan, they've all got massive private wealth businesses. Yeah. And that all is driving their structured product business, which means they end up with a huge derivative business. So we're in Europe, we're building out a structured product business. And then towards the end of the year, we're going to be listing options on the platform as well. So replicating exactly the same circular, accretive business that we see in traditional finance.
And you're right, because I think from a structured products perspective, let's focus on structured products for a second.
Sure.
Where do you think we are in the industry, in the evolution of structured products that are being offered to high net worth individuals and private banks and others? But also, what are the type of structured products do you believe that we'll see that will be very mainstream in the crypto ecosystem over the coming years?
So look, I think what we are starting with is some very basic products like a reverse convertible or just a geared note to the upside. This is where we're going to start. And we're seeing very, very early rollouts of these sorts of products. We're a long way from broad adoption. But what I will tell you is that the demand, particularly in Europe, is absolutely huge for this product. And so it's not just Europe. I mean, Asia as well. I mean, Hong Kong's a huge place for structured products as well. So I think across the world there's this demand, but we're particularly seeing in Europe, our whole team's based in Europe. We brought them out of traditional finance from both UBS and Deutsche Bank, and they've been working with quite a lot of the providers within mainland Europe to help them build out crypto-related structured products, obviously.
So actually, when we talk about structured products, right, when you're looking at hiring for these roles, I would say the native, crypto OG that comes out, that grew up in this token world the last couple of years, will not necessarily have the experience or the expertise, especially from a risk management perspective, to manage a lot of the kind of the back end of a lot of these structured products. Yeah. Who are the people that you're looking at hiring, or who are the people you've hired, like the backgrounds? Are there people coming from the traditional finance world with derivative backgrounds? Yeah. Like, what are the type of person that you think will be well suited to develop this fast-growing industry over the coming years? Yeah,
look, I mean, we're designing an organization that is geared towards institutions coming from the traditional finance space. So obviously we need to speak their language, and we need people that can speak their language. And what I generally find is, if the passion is there, if the excitement is there, getting up the curve in crypto, even though you don't tend to really sleep, can happen quite quickly, especially if you've got a good base in traditional financial products. It's really mapping that crypto element into that. Doing it the other way around and bringing someone that really has been in crypto forever and trying to teach them financial products is a bit more of a challenge.
What are you looking for? What is the one thing you're looking for when you're hiring people? Is it passion, talent, expertise? What is it? What do you like when you hire people?
I think passion and persistence are the qualities that always make you successful, right? If someone is just driven and persistent in that desire to win, they will win, wherever they are. So it's about making sure that these people are not too tunnel vision, that they can't work in a broader organization or can't work with a broader team. But those are the sorts of people we care about. Passionate about the industry, passionate about what the industry can become with some of these tools from traditional finance as well.
Because it's an industry that is 24/7, you better be passionate about it from that perspective. One thing that sets, I think, EQONEX apart from many of your competitors is the fact that you're listed. You're actually listed on NASDAQ, which is quite interesting. Can you maybe share with our listeners today, how was the experience of bringing a company public, but also most importantly, how you guys did it via SPAC? And you're actually one of the first companies, I would say in crypto, you kind of set the trend in that regards. Like, how was the experience and what's your view on SPACs for crypto companies? Do you think we'll have more of these? Do you think it'll be common, or do you think it's a fad? Like, I'd just love to hear your views on that perspective.
Look, I think SPACs are a great way to get listed. I think they can work really well. What I would say to anybody that's considering a SPAC listing is choose your partners extremely carefully. There are a lot of people involved. You need to have the right sponsor, the right banking partner, the right legal firm, and the right auditors as well. And if you get any of those wrong, it makes for a much more painful process. I'm not going to comment on which of those might have been wrong in our experience, but we certainly had our work cut out. And look, it's a hell of a lot of work. NASDAQ is one of the #1 exchanges in the world, and to get listed on NASDAQ, you need approval from the SEC. So there's quite a process. And given, as you rightly say, we were the first crypto company that incorporated an exchange to be listed on NASDAQ, there was a lot of scrutiny. The SEC, they were very responsive, fantastic regulator, fantastic questions, but they came back many times. And it was definitely a challenge. And as you say, in a 24/7 industry, when you're trying to take a company public as well, I mean, it was like, we didn't sleep much.
How was it as a CEO? What changed after you became public? What is different from a private company to a public company?
So the big change is around board governance. Obviously, as a private company, you're kind of just running around trying to make things work, make ends meet. Obviously when you come into the listed sphere, obviously it's significantly easier to raise capital, but having that governance and oversight from a board, we have a board meeting every 2 months. So it's also a lot of work. It's a lot of commitment on that governance. And, we've got a fantastic board, super smart NEDs, who, they want to know everything. They want to understand why we're doing everything and why we're doing it the way we're doing it. But they also, at the same time, provide remarkable guidance and leadership for us in terms of defining strategy and thinking about how to take things forward. So I would say, look, it comes with its pros and cons. There's a lot of additional work as being a NASDAQ listed company. It's a lot of governance, a lot of filings. Pretty much every weekend we're working on filings, F1s, 20Fs, S3s. There's a lot of work.
Yeah, you're an expert of forms now, that's for sure. And another thing I want to ask you is, when we talk about, let's say, the end game, right? I mean, today, when we look, let's say, from an institutional perspective, we're seeing a lot of the traditional financial institutions are starting to enter the crypto space. Mm-hmm. Obviously, a lot of them are doing via the wealth management side, the private banking side. We're seeing others now look at some of the more investment banking elements to it. What do you think is going to happen if today you're the CEO of a traditional financial institution? You'd go back to your old world. Mm-hmm. What is the best approach for them? Should they buy a crypto platform? Should they partner with Should they build it in-house? Where do you think, what are the approaches that you think we will see more and more frequently as an increasing number of traditional financial institutions enter the crypto space?
Yeah, it's a fantastic question. I think there are multiple things. So first of all, everybody needs to solve custody. If they have a client base that wants to touch the asset, and we're seeing this with all the private wealth firms at the moment, trying to work out how do we deal with custody. So we see a lot of requests for white labeling, a lot of RFPs around how do you price, these sorts of things, some of the biggest institutions in the world. They're also trying to work out how to trade it as well. You know, it's always the case in a big bank that building tech just takes forever and costs hundreds of millions of dollars. So for them, like you say, to be able to buy a platform or use a platform like we have in our Access trading product to allow you to trade over multiple venues, to trade multiple derivative products, to have different algorithms within that, we've kind of solved that problem for them. So yeah, I think there are multiple angles that these institutions want to look at. And depending on the institution, it can range from using services like the exchange, like, you know, we had one that was looking at white labeling and then saying, okay, well, the reason we want to white label your custodian is actually because you got an exchange as well. We can offer that to our clients directly from the custodian. And so you kind of, it depends on the organization and what they're looking at, but that's, it can really be anything, which is, again, why we built the ecosystem the way we did, because we want to be able to cater to all those various different needs.
And you think from a traditional financial perspective, from a traditional financial institution perspective, do you think we'll see the private banks move faster? It'd be the commercial banks, or it'd be the investment banks you think we'll see move fastest into crypto over the next couple of months?
So the private banks are being driven by obviously their clients,
yeah.
and you know, the more conservative are really biding their time, and so some of the boutique-y, smaller private banks are moving a lot faster and being able to get into that space. The investment banks are all looking. They're all trying to understand where they should be using it. They go down the channel of, well, how can we use distributed ledger technology as well, and these sorts of things. So there's all sorts of conversations that happen with these investment banks, and they're kind of just throwing spaghetti at the wall at the moment. But, you know, there are some that are really advanced. You've got Goldman that have their own trading desk, JP that have their own trading desk, Nomura have their own STO business. They have their own custodian that they did in partnership with Ledger. So there's a few banks that are really advanced, and there's some banks that are nowhere. So it's really interesting to watch. Obviously, Bank of America came out of absolutely nowhere saying, okay, we want to have a crypto business. But if you peel back, they're nowhere. So, you know, people are trying to catch up, and this is what we're going to see. We're in obviously a sort of a trend for Bitcoin at the moment where things are just sort of stable and not moving. But I think we're going to see a second part of the cycle come along soon. And this is really going to drive things further for these institutions that feel like they're missing out.
It's very, very interesting. Some of the developments you mentioned with financial institutions from that perspective, right? What is the competitor of the future? When you look, you know, at the future, the people you'll be competing with, are those other regulated exchanges? Are they going to be financial institutions? Is it going to be decentralized exchanges? And where do you see really the competition for your business will come over the coming years?
It's going to be really amazing to watch how some of the investment banks manage to evolve their business into this space. I think that, you know, obviously they've got huge client bases, but their client bases are becoming very impatient. And when they've got the flexibility to go to other platforms, you know, they're going to start to lose them. And I think we are getting to that stage of early majority adoption, which is a huge part of the bell curve when you see an adoption cycle. So I think if people aren't acting quickly, then a lot of the proceeds are going to come to platforms like ourselves, like the Coinbases of this world, etc. So I think, how does the future look? Well, as you know, in crypto, always impossible to tell, right?
You know, one last question before we move to the final round that I want to ask you. I know it's a topic you're very passionate about, is treasury. You know, a couple of months ago, we saw some of the firms like the Teslas of this world, the Meitu in Hong Kong, Nexo in Japan, others who started putting Bitcoin on their balance sheet. And, you know, after some of the Elon Musk brouhaha, some of that actually slowed down. Do you believe that we will see a resurgence of companies looking at putting Bitcoin on their balance sheet? And what do you think are the catalysts to that to happen?
If you look at all the companies that have put Bitcoin on the balance sheet, it's generally companies that are run by one single person who has a lot of control. So obviously with Tesla, that was Elon Musk. With MicroStrategy, that was Michael Saylor. When you go to a broader company, and I can speak to experience of having just that broad board, oversight and governance without a single person owning such a huge stake in the company, it becomes a much broader conversation. And so I think, for companies like that, if you go down the curve and look at companies that are more flexible in the way that they look at their corporate treasury, but have a lot of process to get there, they're thinking right now, do we actually buy the asset, which is obviously what Michael Saylor's doing, what Tesla did, or do we try and buy a listed product? How do we do it? What's the best product? So there's this whole conversation that's going on. And whether we all like Elon Musk anymore or not, one thing that he did do was actually highlight to the finance departments and CFOs that they need to be taking this asset seriously. And so I think this is now push forward the conversation for a lot of these corporate treasury departments to understand exactly how this can protect their balance sheet.
No, I think you're right. It's going to be very interesting to watch especially from, I guess, with the potential risk of inflation, hyperinflation, currency devaluation. That brings up the conversation even more to the forefront, I would expect from that perspective, right?
Absolutely. I think, we're obviously seeing the largest amount of dollars ever printed in a single year. I mean, we all witnessed what happened after 2008 when they started printing. Schools, holidays, houses, everything is significantly more expensive. What on earth is going to happen after you just printed 40% of the dollars in existence in a single year? I mean, it's frightening. It really scares me, and I hope everybody has some Bitcoin just to protect their wealth.
Wise words of wisdom there. Actually, one next thing I want to discuss, and then we'll go to the 5-round question. It's about mining. Sure. In the early days before, when EQONEX was Diginex, as you mentioned, in the early days, you guys were in the Bitcoin mining business.
Yeah.
Obviously, there's been, in recent weeks, a lot of tectonic changes in the mining industry, with basically China banning Bitcoin mining and a lot of activity moving out of China. What do you think are the prospects? I mean, I'd love to get your views on what happened, but also what is the future of Bitcoin mining? Are you positive? Are you neutral or negative? And who I think will be the winners and the losers based on some of the macro shifts that we had in the Bitcoin mining space recently?
It's funny, on the way over here, someone was saying, they were making the case for Bitcoin mining. I was on a chat I'm on, and they said, but, at the end of the day, it's still too much electricity. And I'm like, okay, so for me, the question is, how much electricity is the right amount of electricity for a network that provides incorruptible financial freedom to the entire world? Like, is it as much as you use for a light bulb, or is it as much as you use for a small country? And if it's not that, then where is it? So I think the whole question becomes slightly ridiculous. If you don't understand the value proposition of Bitcoin, then any electricity consumption is too much. Right? So I think we're going to just keep going back and forth about this debate. But if you look at any industry and their utilization of clean energy, there is no industry in the world that is as clean as Bitcoin. And I think this is what people should be focused on. Not trying to kill Bitcoin because it's not ESG compliant.
Well, but when you say that it's the industry that is the cleanest, what do you mean exactly from that?
I mean, in terms of the utilization, and we were a miner, right? We did not use coal-powered energy. We would go and find the cheapest energy on the planet. We were using hydroelectric power in northern Sweden, where the forestry industry had upsticked and left and closed down. And there was all this stranded hydroelectric power infrastructure. Yeah. In Switzerland, we were mining with a group in Gondo. Over the border in Italy, a kilometer down the road, they were closing a hydroelectric power station. We were like, no. We'll run an optic fiber cable down to there, and we'll use your electricity, right? And this is what we saw time and time again. Even when we were mining in China, we were using hydroelectric power from a village that had been displaced by the government to build a massive hydroelectric power station. And part of their rights as villages that had been displaced was to sell out that hydroelectric power. So we never used dirty energy. And if you look at the network, pre-China's close down, 76% of the network was using clean energy networks. Yeah. And that's what Bitcoin motivates. It incentivizes miners to find the cheapest energy. And that means, the guy that's got a big plot of land in the middle of nowhere in Texas, miles away from national grid, can now monetize that land by putting solar panels on it and renting it out to Bitcoin miners. So what are we doing? We're actually propagating much broader clean energy networks across the world.
Actually, I would argue, I would agree with you. I think in many cases also making that renewable energy more sustainable, profitable. And like you said, the miners will always go where the cheapest electricity is, and that often happens to be renewables, like hydro,
Absolutely.
for example. So very, very interesting point. But Richard, we have to go to our little fire round questions. So the famous Bell is back with me today. So what I'm going to do, I'm going to ask you quick questions. I want 1 or 2 word answers.
Sure.
And we'll take it from there. Are you ready?
I think so.
Richard, your 18-year-old nephew comes and asks you, what is the one piece of advice you'd have for him as an 18-year-old? What would your piece of advice?
Buy Bitcoin.
Buy Bitcoin. You have the chance to launch one new startup today, and you can choose any entrepreneur that in the world today. Who would you choose?
Sorry, I'm choosing the entrepreneur.
You
I'm
choose
choosing
the entrepreneur. The entrepreneur.
Oh, Sam Bankman-Fried.
From FTX.
Yeah.
He lives in Hong Kong as well.
He's a
He'll be
machine.
very, very happy to do so. If you're not in crypto, what is the one industry you would want to be in?
Financial education.
Oh, gee. Why is that?
I feel that the world is really poorly educated in finance, and I think that it's, pre the existence of Bitcoin, it's a real burden for the world. You take any, anyway, I can go into the details.
I think we should have another podcast on this one as well. Sure. What do you do in your free time when you're not working at EQONEX?
Playing with my kids.
You spend so much time in quarantine. What is the one piece of advice for anybody going into these mandatory quarantines right now? Make your bed every morning. It sets your head straight, cleans you up. It's funny, I was doing the same in quarantine every morning. It becomes the discipline you have. Your favorite musician? Led Zeppelin, Jimmy Page. Wow, very interesting. Your favorite drink at a bar, your go-to drink at a bar? Macallan 18. Macallan 18, here we go. Good single malt. If you could have lunch with one person, one person dead or alive that ever existed on this planet, who would you have lunch with? It's a tough one. I would say the French philosopher Voltaire. Wow, why is that? Actually, he was one of the guys who was a really early proponent of the taking away power of money printing. He was famously quoted in the 17th century as saying, paper money always returns to its base value of 0. You can see that the root of your Bitcoin love there. Richard, if you're not an entrepreneur, you're not running EQONEX, what would you do? I'd be working in some way in finance, as I said, probably financial education. I think it's a real passion of mine in helping people understand how to make money and free themselves financially. Good. What is keeping you up at night? What isn't keeping me up at night? I don't know. What's going on in China? It's keeping you up at night. Okay. Last question with Richard. The price of Bitcoin, your prediction that on December 31st and 5 years from now. December 31st, I'd say, my prediction for this cycle is 175,000. For December 31st, I've pushed that back a bit, so 125,000. For December 31st, 5 years? December 31st, 5 years, we're over $1 million. Wow, here we go. Very bullish perspective on there. Well, Richard, thank you for being with us on the show on the Future of Money. It was great to have you with us today. Henry. Good to see you. Thanks you. That was Richard Byworth, the CEO of EQONEX. EQONEX is listed on NASDAQ. The ticker is EQOS under the name DigiNex Limited. Make sure to click subscribe if you like this podcast. A new episode will be released every other week. Do you want to stay on top of the latest developments on crypto and the future of money? Make sure to also follow me on LinkedIn and Twitter, especially for my weekly Crypto Capsule show, where I summarize the global crypto developments that you need to know in less than 60 seconds. Also, don't forget to subscribe on LinkedIn to my weekly newsletter called The Future of Money, where I share the 3 big ideas on the future of money that you need to know each week. If you want to learn more about crypto, make sure to also check out my YouTube channel, where I have not only videos of previous interviews, but also lots of crypto educational videos. And the good news is that all my video content is now also available in French, Arabic, and Mandarin Chinese on my various YouTube channels. Thanks for joining me today on this episode of the Future of Money podcast, and see you all next time.